Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of June the 5th, 2017. Now what we have coming into this week is going to be a very politically dominated week here where we've got things happening in the US, the UK elections, a lot of things going on. So let's see if we can try and get through all of this. Now the first thing we want to look at is the US dollar cycles. Now, the cycles that I've talked about as of late is we can see that the dollar here, I'm going to draw some lines in here to make it very easy for everybody to see this, that I've talked about institutional flows. So what we look at with these institutional flows over the last 3 months, and what I've talked about also with my own direct clients, is we look at this on a monthly basis. We can see that the dollar is selling off basically around the 15th of the month, and then towards the end of the month, each month, it starts to regain its composure. Now, we also want to look and take into consideration that we're coming out of the non-farm payroll. In my respectful opinion here, guys, we want to look at that number a little bit closer. Now, the reason I say we want to look at this a little bit closer because things are not always as they seem here. So again, what I work on with my own direct clients is I look at the U6 number, the real unemployment number. When we look at the beginning of 2017, we were at 9.4. Last month was a fantastic number at 8.6, but now we've fallen all the way down to 8.4. And if we look at that over the last several years, to go back to find a number like 8.4, we're going back into 2006, 2007 to get these kind of fantastic numbers. Now, the headline number was very poor at 130. I believe that the ADP report was way off base again, and it sent the market, very much confused the market. But we don't want to fall for that. At the end of the day, the reality is that the unemployment is modestly moving in the right direction here. So it's not super dollar positive, but it's not really dollar negative either. So when we look at this, we've got a very tight channel on the dollar index next week. And again, I cannot stress enough that Forex market is buying or selling, largely buying or selling US dollars. So when we look at that key level from last week, we've got 97.50 here, we've got 97.32 on the VantagePoint 18-day predicted moving average, with still a slight bias to the downside, but we're oversold here, guys. The reality is the dollar in the first week of the new month usually regains, and I try and stress that here. We see this basically 9 out of the 12 months of the year, so we're in this very tight channel here, and we're probably going to see a sell-off on Monday, but look for the dollar to potentially recover. The risk, of course, the political risk to the US dollar next week is Comey is going to testify before Congress. I don't know what he's going to say. That's a wild card. That could hurt the dollar. There's no question about it. There's a lot of talk about rate hikes, but overall, I don't believe that that number was poor on Friday, and I believe the rate hike for June is still on the table. So when we bring that into our main currencies here, we want to look at that euro currency a lot closer here. We can see we've got last year's rate at this time last year, which once again, I cannot stress enough to bring seasonalities into currencies. Last year, the seasonality in the payroll number was a very weak number, and then it recovered. The June number was better. So when we look at this, in my respectful opinion, the euro is likely getting ready to make a top here between the area that I talked about last week towards 113. We may see 114 this week on choppy conditions that are going on in the UK and the US, but overall, the euro is likely to put a top in here very soon. So unless we break through 114, the risk to the euro is skewed to the downside. Now, the VantagePoint indicators, again, they're very mixed here. We've got our neural index back up, but our long-term predicted difference is pointing lower. Longer-term indicators are always good for the bigger picture here. Shorter term, we're picking up on some noise. There's absolutely no question about that. But I believe the VantagePoint 18-day predicted moving average at 111.21 is likely going to get tested potentially by midweek. Now, with the US Swiss franc, which mirrors the euro US, but in the opposite direction, one goes up, the other goes down, we can see again a very tight channel, that key vantage point level, 97.93. Once again, just like the dollar index, the US Swiss franc is oversold. I would look for potentially a reversal. Now, my concern here once again here, guys, is that we've broken through this channel, but we broke through for the wrong reasons on a thin illiquid markets on Friday. And once again here, in the case of sounding like a broken record with my own clients, I warn them that 9 times out of 10, whatever the market does on the Friday of the non-farm payroll, it does the exact opposite by Tuesday, late Monday, mid-Tuesday of the following week. So with this big sell-off, I believe that this is the wrong move here, and the market is too focused on the U3 number. Now, when we look at the British pound going into next week, the VantagePoint indicators were quite accurate in last week's outlook where we had that move lower, but we're stalling out here down around 127.70. With the UK elections coming up, the pound is going to be very, very choppy next week here, guys, so be very careful with this one. The indicators are incredibly mixed, but the VantagePoint 18-day predicted moving average, 128.90, that is the area to watch. Now, if we can make a sustained break of this particular level here, that would start to take the pressure off the downside, and we would move back towards this 130 area. But right now, I think that's very unlikely based around the non-farm payroll number, the fact that we've had yet another terrorist attack in London, which again is not good, usually is not good at all for the currency. Plus on top of that, the election, political unrest there. So it's going to be very difficult for the British pound to advance to any real degree this coming week. So right now, I think that shorting the British pound into this 128.90 area, or maybe just above, is still a reasonable play. But the bigger picture is we're looking for a break of this short-term range between 130.20 and the 127.70 area. Now, a break of 127.70, I would advise to get your shorts in there pretty quick, because it's probably going to move down pretty aggressively. But the VantagePoint indicators are warning that if it does break, it's going to be a slow-moving train here. So I think we're okay for now, but keep a very close eye on this particular range. Now, as we come into the dollar-yen from last week, the last couple of weeks, same deal here, guys. We've come back up and tested this VantagePoint 18-day predicted moving average at the 111.55 area multiple times, and we've had a big failure off of this level on Friday. Hit exactly on that number and then basically collapsed. But again, it was based off the headline U3 number. Thin illiquid markets on Friday. Right now, the key thing is watch this 110 area very closely. I believe they're going to try and run the longs out of this, push it down a little bit, flush out the market, and then dollar-yen is going to likely move higher. Now, again, we are slightly oversold, so we do have a room to extend lower. But if we break through this 110 area, of course, the risk is for a bigger move back down to potentially the more recent swing lows, which would take us back down in around the 108.80 area, where, of course, at that time, we would likely still be buyers. But again, the key level we have to watch here this week is 110, 109.50 to see if we can have a sustained break of this current range. But if this bottom holds, then we are likely going to come back up to the 111.55 area to test these key VantagePoint levels. Now, coming into our three main commodity currencies, the CAD, Aussie, and New Zealand. US CAD, again, not a bad week. I talked about a bottom forming here at 134 last week. That's come to fruition, but we cannot get past this critical VantagePoint 18-day predicted moving average, which makes this a very easy trade for us selling into this 135.23 area. You can see we've tested it not once, but 3 times, and then we failed. My concern again here is the misinterpretation of the labor report and falling oil prices. Oil prices go lower, that is a weakening effect for the Canadian dollar. So right now we're playing in this range. The VantagePoint indicators are still pointing higher. I would agree with that. We are not below the 40 line here on the predicted RSI, but we did fail at the 50. So we're looking for it to hold here. But by Tuesday or Wednesday of next week, possibly even Monday, if oil keeps moving lower, I would look for US CAD to return to the upside. But as long as we hold above the current range bottom at 134, then there's more pressure on the upside than there is on the downside. And again, as long as those oil prices keep moving lower. Now, as we come into the Aussie and the New Zealand, virtually the same trade here, guys. We can see that the Aussie is sold off, but then it's rallied back, a big rally back up off that non-farm payroll number. But we stalled exactly on the VantagePoint 18-day predicted moving average, again at 74.40. So it doesn't exactly set up a bullish situation for this particular pair. We have trend line resistance at 75. To get really excited about longs on Aussie US here, guys, we've got to get through this 75 area, 75.50, so we can make a run back towards the 77.50. We're going to need gold prices moving higher for that to happen. And at this particular time, the Aussie basically is just moving sideways between 75.50 and about the 73.20 area. So we buy the bottom and we sell the top. That's basically how we play this. But in this particular situation, we are in a known cycle period of dollar strength. Now, New Zealand economy is picking up there. Longs, I talked about that last week. We got past the first area of resistance based around that VantagePoint AAA cross, and we have continued to advance past the swing high at 70.50 that I talked about in last week's weekly outlook. So New Zealand appears to be on the move here, probably going to move higher. It needs gold to keep moving up also. If gold continues to move up, we're going to see Aussie and New Zealand move up at the end of the day. So keep an eye on the yellow metal if you're trading these two particular pairs.